Hello, everyone. Happy Sunday. This is Simon with AvaTrade. I want to welcome everyone to our weekly webinar, and I'm very excited about this one. I'll share with you my thoughts in a moment. So, again, for new people, special welcome. The title says it all: the weekly trading plan. We're trying to really look into the week and get our trading in an organized way. To make a plan, as I always say, I don't know who said it. I'm just quoting. You plan your trade and then you trade your plan. This way, trading becomes more organized. No guarantees of results, unfortunately, but definitely less chaos, less unpredictable things happening this way. Few things about myself. This is me, Simon Friedman. I'm a senior account manager with AvaTrade. I started my trading career in June of 2000, so it's over 20 to almost 23 years. As a proprietary trader, I did it for about 11 years, and after that, I moved to mentor and educate other traders. And of course, I never stopped trading since then. Trading is my passion. I really love it. And I try to help as much as I can to the customers that I work with, and try to share my knowledge, my expertise, my experience. And this is the agenda. We usually do it in this order. Sometimes it's different. We'll talk about indices, stocks, commodities, Forex. At the end, a little bit at crypto. We'll take a look. These are the channels that I highly recommend for you to follow, especially the YouTube. You have Telegram, you have Twitter, and the YouTube channel it's really filled with amazing information from tutorials to daily and weekly webinars. You can subscribe, you can click on that bell so you'll be notified. You can share, of course, the links to it. And if you miss a live webinar, most of them are being posted, recorded and posted to the YouTube channel. And one more thing, risk warning, you can find a full document at avatrade.com. And everything we do here is purely educational. So I started actually saying that I'm very excited. And Wednesday when the numbers came out, I just want to share with you my experience. I came to trade in year 2000, and there was the burst of a bubble, and the big traders in my group, they was just saying short everything with 4 letters. We used to trade only NASDAQ at that time. So it was kind of easy trade, easy trading. You short the market in the morning, you cover in the afternoon. We didn't take positions overnight as a day trader. That's the definition. And that was going for a while. And through all these years, there's always something. And the bad news is the bad news now. Then it became the bad news is the good news, and I'll explain. Especially after the crash of 2008, the Fed started the whole printing money system. I'm not going to go into it because that would take hours to explain the whole thing. But basically what happened, as long as the economy was struggling, they were really, really putting money into it, printing money, cutting the interest rates, and so on. And it's been going for a while. And this is the first time, actually, last Wednesday, when the numbers came out. The PMI numbers came out bad, and then it followed with the retail sales came back, and the market really sold. So it's the first time in years that I see it, because it's been the opposite. Wow, let's just hope for bad news, so the Feds will not be so aggressive, or they will not increase the rates, or they will not, take all the spreadsheet, all the assets that they purchased through the years. They're not going to sell it aggressively. So there's so many things. So that's why I'm very excited. It looks like, I could be mistaken, but it looks like we're getting back to normal market conditions when the bad economic numbers are really bad for the stocks, and that would be bad for indices and so on. Okay, that's very interesting, because until now it was all inflation, kind of focused on inflation. As long as the inflation is staying high and then the inflation is going lower. Okay, the Feds are going to be more dovish. It's very confusing. So I hope really that we continue this direction. It will be easier for all of us to really analyze the markets and react to the news and so on. So I just wanted to share with you that observation of mine. So I took this picture again from MarketWatch. It says U.S. Treasury is a critical point. So as the market sold actually on Wednesday, with the numbers, the bonds really went up in value. So that's what they meant here, just correlation. So there's also another thing you can look into. There's a Goldman Sachs system or structure that's been working for years, the 60-40 formula that would invest 60% into stocks and 40 into bonds. And last year, both stocks and bonds really sold. So there's a lot of talks and a lot of aggravation and arguments, and I think BlackRock is arguing with Goldman that the system is not good and so on. So interesting, what they're going to come as far as the recommendation for investors. We don't really care as traders, the ratio for us is not really important, but I just thought I would bring it up. In any event, it looks like the traders are looking for safe haven. And it looks like they finding it in fixed income, which is bonds, the treasuries, and also gold. Looks like gold is returning to being a safe haven. We're going to take a look at it at the moment. So that's pretty much what's happening. And like I say, it's going to be very good if we really get into this phase of reality of really bad news being a bad news, and as the fear of recession is growing and the traders and investors are looking for safe haven, it's going to be very interesting. So I'm very excited for this upcoming week. It's going to be nice to see what's happening there. So again, we have this week, the end of the week, the Feds are meeting, and the 31st of January and the first two-day meeting, and then the first they'll come up with interest rate decision, and it looks like everybody's expecting 0.25%, and based on this CME-based analysis, I don't really know how to do it. They say it's about over 90% chance that it's going to be 0.25. So we'll have, of course, more picture as far as how far we're going to go in interest rate, when it's going to end. Some say it's going to end before the end of the year. Others says the Feds are going to be raising into the end of 2023, and then it's going to be a pause, and then they start cutting. So it's a lot of unknown as far as the interest rate decision, but we'll see what happens. So this is as far as the bonds. Now, economic calendar. Again, for new people, just to remind everyone the importance of it. You can customize it. You can take a look what's relevant to your trading. What I do here, I just take out the high impact announcements, and these are the announcements for this upcoming week. And again, you could believe in it, not believe it's not important. The way I look at it, I just like to know there's certain things that are happening at certain times, so I won't be caught by surprise in a unknown move or unexpected move on the market. So Sunday we have the monetary policy meeting minutes from Japan, and Japan is it's been under the really strong focus. Last week it was a surprise. They didn't really raise rates, and we'll take a look at later at the charts what happened. It was a huge move on yen. So that's the monetary policy meeting minutes on Sunday evening, right? Tuesday we have PMI numbers from Germany, and then PMI numbers from Europe as a whole. We have UK PMI and CPI numbers from New Zealand. That's on Tuesday. Wednesday, CPI numbers from Australia. We have Bank of Canada, big day for announcements, monetary policy report, interest rate decision statement, and press conference. This is, I think, the Canadian Powell's version, if you can say that. And Thursday, durable goods orders, and big number here. Now, if what I was saying it's getting to be true, so GDP numbers, the low numbers could actually, in this case, if they really take it as it is, could really affect the market in a real way. So that's on Thursday. That's it pretty much. Again, you can customize the economic calendar. You can look into it by country, by so on. We have economic calendar on the web trader, on the app. Also, you can Google it. A lot of third parties are doing it. It's public information. There's no secrets here. Okay, let's move on. We'll go into the MT4 to look at the market. So that's what I mentioned right here. When the numbers came out in the afternoon on the Wednesday, the 18th, market really sold. It sold, and then we were really in this range for a while. And Friday was a very strong day for the markets for some reason, very interesting. Netflix played a big role in it. Also, Google played a big role in it, and I will explain. So last week, if you remember, we spoke about Netflix reporting on the 19th, the Goldman Sachs reporting on the 17th. So Goldman really sold disappointing results. And it's funny because the other banks reported earlier pretty good results, and even Goldman went up with it, if you remember, I mentioned to you. So Goldman really sold on the news, on the earnings. It really sold. Then Wednesday, Thursday tried to really keep up their price. Then Friday is actually sold on the strong markets. Very interesting. Now, we'll see what happens. There's a lot of talks. Of course, Goldman is a big company. They're ruling the market pretty much. You can say that. So some analysts say, okay, after being beaten up, maybe it's time to buy. We'll see. So as I said, Netflix played a big role. They came up with big numbers, larger amount of subscribers, and so on. And the stock moved higher, and of course, market took it in a positive way. And this is the weekly chart. We came out of the previous recent resistance from December, the 11th of December resistance, and from here we could actually move higher. Anything could happen, or we go in the opposite direction. Again, depends what market is doing, depends how strong investors believe in that. Just to remind you, they have a new model they recently adopted, different kind of memberships. Some are with advertisement and so on. So it looks like things are improving for them. Now, Google also had a nice move on Friday. Just want to bring it up. It moved to the upside. They just announced it. The CEO actually mentioned it in a memo. The 12,000 people are being laid off. And that's a big number. And as I mentioned on a few occasions, when the company, if you remember, when Amazon did it, also the stock went up. When announcements like that happen, it's a sad thing for people that are being fired in a simple way. But for the shareholders, it's a good thing because it gives them more hope on the whole idea why companies firing employees to save the money to increase their earning per share. And that's the simple thing. So that's Google. And as I was looking into Google's announcement, actually, I was wondering what's with Apple. So far, Apple didn't really lay off any people. I think most of them they froze hiring, but Apple didn't. And I did some research, and it says right here, I took it also from MarketWatch somewhere, I believe, so it says right here, from the end of September 2019 to September 2022, we're talking 3 years, Apple's workforce grew by about 20%. And it's about 164,000 full-time employees. Now, why? So 20% they grew, right? Meanwhile, over about the same period of time, the employee count at Amazon doubled. Okay, no wonder recently they lay off a lot of people. Microsoft rose by 53%. Google rose by 57%, and Facebook or Meta, they grew by 94%. So no wonder those companies really actively firing people while Apple is really not doing it because they're pretty much better positioned. They didn't really blow up the amount of the employees like the other companies. Just interesting fact that I wanted to bring up. Okay, so we said Google on the news of the laying off employees went up, Netflix went up, and the stocks, the indices really bounced. So let's take a look at indices really quick. We had a sell-off since the news on Thursday, and then we bounced. Friday was a very nice day. We erased the Thursday's losses. And I just want to show you here, it's very interesting. If you take this move of the announcement and you use the Fibonacci retracement, take a look. We actually recover from the lows at 61.8. We at the 61.8% recovery. Technically speaking, this could be it. And with all the negative mood on the market, maybe comes Monday and we're going to start selling. Or if we are moving higher on Monday, then definitely we'll be retesting the pre-announcement area. And that was around here. Let's see. Pre-announcement high was around 4,030 on S&P. So it's very interesting to watch what's going to happen in the beginning of the week. Okay, so that's S&Ps. Dow Jones also had a nice move on Friday, recovering a little bit, and Nasdaq did as well. Nasdaq actually acted the strongest, of course, as Netflix being affecting the index. So on Nasdaq, we actually erased the previous 3 days of falling. So strong move on Nasdaq. Again, we'll see how the week starts. And definitely, I'm not the only one trying to digest the effect of the news. And definitely, we're going to have some articles and ideas from analysts and some public opinions being brought to us on Monday and the upcoming week. So it's going to be very, very interesting. Now, European indices, DAX cooled down, of course, with the falling of the US market. Friday had the recovery, but we didn't break above Thursday. So this could be actually a beginning of a correction as well. Anything could happen. The same thing on the UK index. We didn't really have that run on Friday. The same thing on French index. It looks like they're tipping over a little bit. That really, if you remember last week, I said that the European indices are on fire. So let's see. Of course, they're going to start the week. Actually, the Asian indices are going to start the week, and they're followed by European. So let's see what happens. Speaking of which, let's take a look at Asian. We had a strong move on China in the recent days, of course, and we are actually trying to break higher. And we are so far 3 straight weeks to the upside. I think there are holidays next week. I'm not sure about the dates. It's a lunar New Year. I didn't have a chance to find that information. I apologize. So please take a look. It could be that Chinese market could be closed for a few days. So China is going higher. With China, as you know, I'm looking at few assets. I'm looking at copper, pretty much almost identical to the Chinese index. It's running higher. Crude oil is trying. Last week, we actually had the retest of this 82.5 resistance back from December. We didn't break through it. And then the following 2 days, we're trying to go again. Now, we are crossing the 100 moving average on oil. So we'll take a look more at oil in a second when I go to commodities. I just wanted to remind you that with China advancing, copper, crude oil is really being affected by that. So we'll take a look what China is doing. Now, Hong Kong index, very, very strong, and we're actually at the very interesting level here. We might be approaching that resistance from which was sold out, and that was back in June 26, and the high was 22,419. We're about 200 and something points away from that. It could be that we'll retest that level this week. Now, as we hear already, I just also wanted to bring up the Alibaba stock. It's really been strong with the Chinese index growing, and it looks like it's trying to really break through. and we are also approaching the strong resistance on the stock itself. Okay, so that's as far as indices. And one more, it's Nike. I almost say Nike. Uh, it's a Nikkei, the Japanese index. Now, Nikkei had a hard time recently with the yen being strong, and this past week with the weakness of the yen, it actually moved to the upside. So let's see again what yen is doing when I go to Forex in a moment. But as of now, Friday was very strong for Nikkei. It could be that will continue till we start hitting at least the moving averages here. So that's as far as indices. Now stocks, we spoke about Goldman is selling again. Will the buyers come, as some analysts like to see? We'll see what happens. Netflix, after the strong move, again, in a lot of cases, the stocks are closing the gap before anything. Not 100% cases, but it happens in a lot of cases. So we might see actually Netflix trying to come in and close the gap or not. Google might continue higher on this news. And again, it all depends how the market will start, how indices will start, how Europe will start, Asia, and so on, how any publications and articles, what they're going to say about Feds and so on. And of course, next week, Thursday, we have the GDP numbers, which will show how the economy is growing. So that's stocks. Now, few earnings, as you know, we started the earnings season. Few things, few stocks are reporting. So on Tuesday, we have few stocks reporting. We have Microsoft reporting. You have Johnson & Johnson reporting, and General Electric is reporting as well. So that's on Tuesday. We have Wednesday, Tesla, AT&T, and Boeing. Let's take a look at them. Tesla has been strong since approaching almost 100. Let's see what this earning report will do to Tesla. Very interesting. Again, they reporting on Wednesday. So is AT&T. Bring 1 hour chart. AT&T is reporting as well on Wednesday. We came into this area of a lot of fighting on the price action. Let's see what happens. And Boeing, as you know, we've been talking about Boeing pretty much every session in the past few weeks. And Boeing, it's been super strong the moment we broke from 190. And let's see what the earnings are showing. Maybe we'll see some exciting news and the stock will continue higher, or the opposite. So these are reporting on Wednesday. These are just few stocks that I chose. Of course, you can just Google earnings and see the stocks that you're interested. Just time-wise, I can show everything. Few stocks that we spoke about last week. We had Disney back to 100. Actually, it's continuing higher. We are hitting 200 moving average over here. Nike, also, we hit that resistance that we mentioned, and we tried to correct, and now we're on the way to retest that resistance again. Teva Pharmaceutical, after hitting that double top, was sold out. Let's see, at some point, buyers might come in again and see if that represents a good level for them to buy. It could be around here, around 950, as you could see. It could be before, it could be after. So as you know, if you take a weekly chart that I mentioned to you, a monthly chart, we're at a very interesting level on Teva Pharmaceutical. We sold out, and the stock that was back in 2019 August. Then we had few attempts to go higher. We couldn't, and we never actually came back to that low. And then around here, around 760, 750 was the low here. 676 back in July. There was a lot of accumulation here, and then finally we broke out of it in January. This is the monthly chart. So January of this year is the beginning of recovery, And it's very interesting. If this momentum continues, we could eventually break out of this range and go high. If you remember a few weeks or months ago, I said that the analysts had the target of $13, and that makes sense because right here, the level of almost 2 years ago, the high was 13.29. So it's worth watching the stock and see whenever we break through that strong resistance, the stock could actually start flying. As again, they are producers of generic medicine, which has been used all over the world. So that's it about stocks. Let's move to Forex really quickly. And dollar index, as we mentioned, it's holding this resistance here. If you take a look at the daily chart, a lot of fighting here, and we can't really break through the level of this resistance here. And that's around 101.40. Last week, we were as low as 101.24, and we closed higher. So as long as we're holding this level, the dollar is remaining strong, and there's always a chance of continuation. And of course, the next interest rate decision will be affecting that for sure. So with that, the majors are acting accordingly. They're all facing resistance here. Australian, New Zealand dollar facing resistance. Definitely euro is facing the resistance. You see, we're pretty much fighting the same level. Pound, the same thing. So if you look at majors, you could just take a look at dollar index and you will know what the picture is. It's dollar related. As long as we're holding this support on dollar, the other currencies are not really running higher against the dollar. Now, I just wanted to show you, as I mentioned at the beginning, the yen. Okay, here's what happened. This is the surprise thing. Everybody was expecting that finally Bank of Japan will increase the rates. They didn't. So immediately dollar went high, or yen just fell, and that was a very strong move. This is 1 hour, and then next hour and next hour, and then take a look what happened right after. It just came back where it started. And funny enough, with all this excitement, we are, I mean, visually speaking, we're right in the middle of this move. You know, let's just measure it out of curiosity. Just want to see. So if you take that huge range, I'll just use this one. Yeah, we're right in the middle of that move. So yen sold, then came back, then slowly went higher, and then settled lower, and right pretty much in the middle. Now, what happens next? A lot of pressure on the Bank of Japan. Everybody's talking about they should do something, and as of now, they haven't. I think the only central bank that didn't increase any rates. So let's see what happens there. So that's why yen is in focus. And if you take a look, I think we should watch this week all the pairs against the yen. Take a look. Pound, yen, euro, yen, all of them had a tremendous move, of course. And of course, the major pair, dollar yen, will be watching that, what happens. Maybe some news, maybe some surprises, as sometimes Bank of Japan is doing some bonds buying and so on, something that affects the currency. But that move was crazy. It was a 600 pip move. We had a 300 pips to the upside, 300 pips in reversal. So, I mean, the range was huge. Just wanted to bring that to your attention. So that's as far as the currency. Now, the last thing that I want to bring up is the Bitcoin. And take a look what's happening here. As the market moved on Friday, so did the Bitcoin. But before that, we had a move that we broke through this dead zone that we were sitting in. Take a look. We were sitting here without any signs of life. And then the week of January 8th, the move from 17,000 to 21.3. And then this past week, it was a continuation. Now, if we do continue that way, we might see resistance around 25,000. That's what we really had 2 attempts, 2 consecutive weeks to break through. We couldn't. And of course, we'll see what dollar is doing. We'll see what the equity market is doing. But it looks like we're on the way to retest this level, which could be logical. And of course, could be anything. Could be new regulations and with all FTX issues and the bankruptcies and so on. We might see some news from the regulators, which could be also a surprise to the downside of Bitcoin or to the upside. It could be anything. So as of now, we're out of this range that we were accumulating for a long time, and we're on the way to retest 25,000, which is possible. And if we do move higher, we probably go and retest these highs here of around 22.5. So we currently in the range between 22.5 and 25,000. So 2,500 range. That's it pretty much. Just to put it all together, we have some news, including the GDP numbers this week. We have market that's reacting in a real way now to the negative news. We have big buying pressure on the bonds and gold as well. Gold has been very strong. Oil is reacting to China as well. And I forgot to mention to you the natural gas. Natural gas has been selling. We've been sitting or retesting around 315, 312 levels, and it's been super weak, and it's kind of strange. So it's either we go lower and continue to maybe psychological level of $3, or at some point we're going to shoot up. There's been a lot of pressure to the downside, a lot of selling in natural gas. Okay, I want to wish everyone a great weekend or whatever is left of it, and definitely a great and successful week. And we'll see you back next Sunday. All the best. Take care.